Welcome back to Alpha Recap. Glad you could join us. Today we're unpacking the market moves from May 5th after the close. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature there.
Great to be here. Markets closed after a busy day. Tech, crypto, and materials led, while cannabis and parts of communications felt the legal and regulatory weight.
So, what really stands out here is the concentration of flows into a few big themes.
Exactly. A handful of high-conviction narratives drove the day. AI and semiconductors, Bitcoin and crypto flows, and a materials rally tied to critical minerals and recycling funding. And at the same time, sectors with big policy footprints, cannabis, communications, healthcare, ran into headline risk that capped gains.
Let's start with crypto because that was a headline grabber. Walk us through what happened.
Sure. Bitcoin finished the day above $81,000, and spot Bitcoin ETFs had persistent inflows for a third straight day.
And the number that really caught our eye, $532 million came into those ETFs for a third consecutive day.
That steady inflow signaled growing institutional comfort with tokenized exposure. Analysts note that such flows can amplify risk-on behavior, and we saw crypto adjacency help lift related equities.
Right. And the other thing is there was also a reminder of security risk, a sizable exploit on the protocol side that kept caution in place.
Yeah, that tracks. So you had institutional product momentum on one hand and protocol-level security issues on the other, a bifurcated picture.
Moving to technology, chips and AI were big stories today. Explain the mechanics for listeners who maybe don't follow semiconductors every day.
In simple terms, larger AI models need more compute. That translates into more GPUs and accelerators, and more frequent hardware refresh cycles. Data showed global chip sales were stronger than expected in the first quarter and in March, which fed momentum for chip suppliers and equipment makers.
So when OpenAI or big cloud operators announce big compute plans, that has real downstream effects for the supply chain.
Exactly. OpenAI's large-scale compute plans, plus continued AI work from Meta and Apple, are driving CapEx cycles for data centers, chip makers, and cloud providers. And we saw evidence of that in corporate signals. Vendors that service chip fabs and test equipment names showed strength. And automakers increasing software bets are another channel for chip demand.
Speaking of automakers, Volkswagen increased its stake in Rivian today.
Honestly, I was a bit surprised by this one. It reinforced the theme that EV platforms are consolidating and that software and semiconductors are increasingly core to vehicle value propositions.
Short reaction? Big move. Materials and mining also outperformed. What drove that?
A combination of M&A headlines, fresh discoveries, and recycling funding tied to critical minerals policy. Policymaker focus on domestic supply chains and circular economy incentives created a positive structural backdrop.
So that's a policy-driven tailwind rather than just a commodity pop.
Right. The market reacted to a multi-quarter narrative, government funding, permitting progress, and the idea that some miners can capture durable pricing power as demand for batteries and advanced materials grows.
Now, on the flip side, cannabis had a messy day.
It did. There was federal rescheduling momentum that could be a major catalyst, but a lawsuit seeking to block the change introduced immediate headline risk. Add state-level pushes like in New Jersey, and you have a very uncertain regulatory landscape.
Not a great day for certainty in that group.
No, it created a standoff where potential upside from rescheduling is being offset by legal risk. Valuations in the sector are very sensitive to each new filing or court update.
Communications and media also had mixed results?
Yes, there were festival revenue beats, casting wins, and some deal activity that offered upside. But disclosure probes and rights disputes around AI usage created an overlay of caution, and that kept some names under pressure.
Healthcare was kind of the same. Some fundraising and interoperability wins, but policy concerns kept a lid on gains.
Correct. Positive data points exist, but public health funding conversations and Medicaid aid debates introduced near-term uncertainty for parts of the sector.
We should mention utilities and energy because they were mixed as well. Walk through that tension.
On one hand, big renewables and storage deals, plus partnerships like the Brookfield nuclear tie-up, are clear structural positives. On the other hand, system reliability is a live issue. The North American Electric Reliability Corporation, or NERC, issued a Level 3 alert which highlights near-term grid strain risks.
That's a rare high-severity warning, right?
Yes, It signals that during certain stress periods, the system could be tight, which can cause short-term price spikes and reputational issues for utilities, even as long-term renewable investment continues.
Finance saw one big M&A. Bullish bought Equinity for $4.2 billion.
That was notable. Consolidation in exchanges and post-trade services can shift fee dynamics and scale economics, but the sector was also wrestling with downgrades and macro pressures on consumer lending.
Short reactions? Right. Got it. Let's pivot to the cross-sector themes you highlighted in the note. AI as a centripetal force, Bitcoin flows amplifying risk on, energy transition versus energy security, policy as a governor, and logistics platform shifts. Can you unpack those briefly?
Sure. First, AI and compute demand are pulling in dollars across tech, industrials, and real estate because data centers need capacity. Second, strong spot Bitcoin ETF inflows were linked to broader risk appetite. Third, energy transition investment is real, but grid reliability issues create near-term noise. Fourth, policy and legal events are acting as binary risk events for sectors like cannabis and communications. And finally, logistics moves, Amazon opening its network, and bids like GameStop's for eBay, reshape last-mile economics and affect industrial real estate and automation demand.
I mean, when you step back and look at this, it's almost like a few powerful narratives are moving more capital than usual.
Yes, concentrated thematic flows were the headline of the day. That concentration can amplify moves for better or worse.
Okay, give listeners 3 practical things to watch in the coming weeks that came out of today.
First, monitor compute and month-to-month chip sales. They're leading indicators of corporate CapEx for cloud and semiconductor suppliers. Second, treat policy headlines as binary events for regulatory exposed sectors. Single filings can swing sentiment. Third, watch persistent ETF flows into crypto. Sustained inflows change liquidity dynamics, but security incidents can force abrupt reversals.
And risks to keep on your radar?
Legal volatility in cannabis. Disclosure or probe findings in communications. A large security exploit in crypto. More NERC alerts or weather-driven grid shocks. And any macro surprise that tightens credit conditions and cools risk appetite.
So to summarize, what are the big takeaways from May 5th?
1. Markets closed up around themes tied to AI, semiconductors, and crypto liquidity. 2. Policy and legal risk acted as a governor, creating asymmetric outcomes. Big upside potential in some sectors, but headline sensitivity in others. 3. Energy and utilities showed the tug between transition investment and short-term reliability concerns. And lastly, flows, whether into ETFs, M&A, or recycling funds, were the mechanism that moved prices, not just single company news.
Right. And a reminder for listeners, this is analysis and context, not investment advice. Analysts note trends and data points, but this is for informational purposes only.
Correct. We're not recommending buying or selling any specific security. Use these inputs as part of a broader research process that fits your own objectives and risk tolerance.
Short reaction? Thanks for that reminder.
Of course.
All right. Final quick hits before we sign off. Watch chip sales cadence, track ETF inflows into crypto, and keep an eye on legal filings in cannabis and communications. Anything else you'd add?
I'd add watching logistics platform moves for cross-sector implications. They can rewire demand for warehouses, automation, and last-mile services over time.
Perfect. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. And don't forget to use the Q&A feature there.
Thanks for listening. We'll be back after the next close to walk through new developments and what they mean for the market narrative.
Thanks, Josh. That's it for today. Take care, everyone.